Hi, it's Jason here. If you're looking for the best ETFs to buy now, you are in the right place. Today, I'm going to show you how at MAPsignals we use data and analysis to pick the best ETFs to hold for today and tomorrow and beyond. I'm going to spend about a minute or two just going over the market and what kind of setup we have. And then I'm going to spend about 1 minute on each of the 5 best ETFs that I've identified today. Let's get right to it. If you surf, you know it pays to know what kind of waters you're dealing with, right? Investing is the same way. So when evaluating the best ETFs to buy for tomorrow and beyond, we need to know what kind of markets we're dealing with today. Sometimes you want to go with the flow and ride the wave. Other times you want to zig while the water's zagging. So we need to know what kind of markets so we can evaluate our investments. Let's do that now. So here's how I do it. I head over to MAPsignals.com and I log into our portal. Now, subscribers can do this for themselves, but follow along with me here. I'm heading right over to the ETF buys and sells page. Now, what you're looking at right here in this chart is 2 years of every daily recorded value of big ETF trades happening on the buy side and on the sell side. And by that, I mean ETFs getting bought and sold in huge volume. 2 concepts I want you to understand here. Simple concepts. When you see big buying, it's typically unsustainable. It usually marks or is near a top. Look at this. This was June of 2020, a top. Here's another big spike. This was September of 2020, a big interim top. And you get little mini peaks here. Typically, when you see a lot of buying, the top is near. But more importantly, when you see tons of selling, like over here in the pandemic, it's right near a bottom or at the bottom. Look over here. This selling is October of 2020, right near a bottom. That was the election scare. And then look over here, March of 2021, at or near a bottom. This is a little peak. And of course, recently, we're seeing tons of ETF selling in January. I want you to understand this goes back long over time. Look over here. The selling is a trough. Here, the selling is a trough. But what do we have in the past 3 months? Let's just zoom in. Check this out. In January, immense ETF selling, and I believe it's marking at or near a bottom is what our data typically tells us historically. Now, why is this important? Because now we know we can go shopping for great ETFs at a discount looking in the forward. So like I said, sometimes you want to ride the wave, go with the trend. Other times you want to buck it. So we're using that as our setup for our ETFs. Let's get into those right now. So what you're looking at right now is the output from MAPsignals ETF scoring process. Okay, here's what I want you to see. You got your ticker over here. You got the name of the ETF. We're using XLE as an example, the Spider Energy Select Sector Spider Fund. The MAP score, which is the overall score, the strongest or weakest. XLE is the strongest. But pay attention because XLE is super strong technical and not so strong fundamental. What does that mean? Well, the fundamentals might be weak because the companies are growing into themselves for future earnings, but their past earnings are not so great. Technically, everybody's been buying oil and energy because the price of oil is spiking. Look at all these top ETFs. You got energy, you got natural gas, you got Vanguard Energy, you got iShares Energy, oil and gas. It's a lot of buying technically. Now, over here, you see the number of stocks in the ETF and how many of them compose scores. So that's how we do it. And right now, you're looking at a list. What you're going to see is there's a lot of fundamentally strong ETFs. Look at these 67 large cap growth and REITs that are scoring weak technically because everybody's been selling stocks. Now, that's where we're going to find our deals. So let's head over to our first ETF by checking out the MAPsignals portal. So I'm back over in my MAPsignals.com portal. I'm checking out the ticker map here, and our first ETF is RDVY. What is that? That is the First Trust Rising Dividend Achievers ETF. This is not a deep discount play. This is a rotation play because investors are positioning for selling growth stocks and buying larger cap and more predictable dividend stocks. Now, first of all, you have to know that rising dividends are phenomenal. I mean, if you look out over time, this thing has done phenomenally well. It's just kind of flatlining here. We've seen a lot of big money buying. This green, let's go back to 1 year, seeing a lot of that green, those big money buy signals. People are scooping them up. Recently, there was a sell signal with that sell-off in January. Now, this thing is packed with great stocks like Activision. Let's just look at Activision. It has a terrific fundamental score. It's pulled back significantly here, but if we were to look at the fundamental score, it's got a 75%. It makes a lot of money, is profitable, pays a dividend, and is rising its dividend. It also holds stocks like Intel and AMAT. The ETF is a $9.2 billion ETF, so it's plenty large and it's liquid enough to get in, and you can get exposure to stocks that are continually rising their dividends. Great ETF. You want quality stocks? Look no further than QUAL. When I buy an ETF, I like to know it holds quality stocks, and that is literally the purpose of this ETF. It's a collection of a basket of stocks that holds quality fundamental characteristics. Look at this. Over the past year, we saw some good big money buy signals. We saw selling in October. We saw selling in January. But the question is, what were they selling? They're selling an ETF with great stocks. And again, if we look back, this thing is on a great ride for a long time. So what kind of stocks does it hold? I'm glad you asked. Stocks like Nike, which I personally own. This stock is a phenomenal stock. It is an outlier for years. Here, look over here. It's been on our top 20 since the stock was about $8. Now it's $145 even after its pullback. Great fundamentals. Other companies, I'm sure you heard of Microsoft and Nvidia, some of the most phenomenal companies out there. QUAL holds it. This ETF is $25 billion, plenty of size, plenty of liquidity, and gets you exposure to some phenomenal stocks without having to own the individual stocks. And of course, QUAL has pulled back from its high of around $146, is now trading right around $130, so gives us a little discount. All right, let's check out our third ETF today, IGV. This is the iShares Expanded Tech-Software ETF. Look at this thing coming in mightily from highs, 446 high roughly, came all the way down, troughed at 329. It is now trading right around 352. It had huge big money buy signals. This thing has been a star performer for a long time. It's given us a discount. So what kind of stocks does it hold? Well, obviously it holds software stocks as mentioned in the title, but it's the type of stocks that it holds. You want outliers? Let's check out Adobe. I mean, a phenomenal company. It has pulled back with this whole sell-off in January. Let that be our advantage for the long term, because look at Adobe. Since way back in the 90s in our back test at a $10, $12 stock, the thing is up at $479.50 after an immense pullback from highs, which was right around $657 or so. Phenomenal company. Adobe scores very high on its fundamentals, makes a bunch of money, technically very weak. It holds other phenomenal stocks like Intuit, which I personally own, and SNPS, Synopsys. These are phenomenal software companies. Software is not going anywhere. Take advantage of the discount. And IGV is plenty liquid. It trades a lot, and it's about a $5.2 billion ETF, so plenty large. It's time for another discount. IHI. This ETF is very cool. It's the iShares US Medical Devices ETF. Look how this thing has pulled back from highs. It was trading around 67. It got eviscerated in January with everything. I mean, we all need medical devices. That is only going to grow. Let's let this market discount be our advantage. But why do I like this ETF? It's because of the stocks it holds, okay? It's got Thermo Fisher, which is one of the longtime giants. This is a large cap company, makes tons of money. And just look at this chart over years, just straight up, tons of big money buying along the way. Whenever they're selling, it tends to be a discount, like right now. So if you don't want to just buy that stock and you want exposure to healthcare, IHI holds it. TMO, again, 75% fundamental, 44 technical, so it's weak. It holds other phenomenal stocks like Abbott Laboratories, ABT, and Intuitive Surgical. They make robots that perform surgery. I mean, this is cool technology. It's not going anywhere. It's only going to grow. Let's take advantage while the market is disfavoring it. This ETF is $9.2 billion in size and trades plenty of shares per day. And our final best ETF for today is FBN. This thing is a deep discount. Why do I like it? Well, we've seen a lot of big money buying in the past. Look at this. Respectable amount in the past couple of years, and when we do, that thing tends to trend higher later. It's pulled back substantially from about 250 right around to 195. This thing holds some phenomenal stocks, okay? Maybe you've heard of Amazon. I'm sure you have. Everybody uses it. Look at that nasty pullback in January, but I probably don't even need to show you what type of chart this looks like over years. It just continually goes higher. This has been a top 20 stock for us many times over the year. Remember, that's that top 20 report that we release once a week. First time it ever appeared was $80. Now it's trading at 3,130. It's up, 14,000% since the first signal. It scores very high fundamental and weak technical. It holds other phenomenal stocks like Cisco, I'm sure you've heard of, and Arista Networks. These are phenomenal companies. FDN is a $7.3 billion ETF, plenty liquid, trades a lot, and also, again, you get exposure to the internet stocks within it. And that is how I find the best ETFs to buy for tomorrow and beyond. I use MAPsignals data because analysis appeals to me. It's cool, it's logic, and there's a lot of great data behind it. Now, if you want to do this for yourself, you can head over to MAPsignals.com to get more information. Sign up for that free blog. Our ETF module is going to be coming out any day now. But for right now, you can do this sort of analysis on over 6,500 US stocks every single day. If you like what you see here, give it a thumbs up. If not, give it a thumbs down or let us know what we're doing wrong. Leave comments below. If you have any questions, please put them in there. I'll try and get to all of them. I appreciate you and everything that you bring. So thanks very much. I will see you next time.